Luke, I wanted to pick up with you just looking at the outlook for 2021, and particularly looking at the countries within CEE. I suppose, what are you seeing as some of the main trends and also the potential opportunities there?
This year, obviously, we're still in a bit of flux as we try and find our footing and understand where the market's going to go. I think there's a few different stories at the current moment. So Poland is going to continue to be the darling and the hub of most investment activity. We've seen within the last few months at least 3 new Asian buyers enter into Poland, and we think you'll see more international buyers make their first and potentially second and third stop in Poland before they go to the rest of Central Europe. And I think that has to do with the size, it has to do with the perceived liquidity, and the availability of products. So we think Poland is going to continue to take the lead, both in terms of investment volumes, but also in terms of the alternative sectors. So when you look at where investors are going to place their money, there's a lot of attention currently in the residential space, also in the logistics space, and some of the alternatives even within logistics, cold storage, etc. And Poland really leads the way, and they're the most developed markets when it comes to these new subsectors. So I anticipate that is only going to further kind of increase Poland's dominance within Central Europe. Czech Republic, it's the same story as we've had previously: a lack of supply, strong domestic demand, strong international demand, and I think that story will continue. We're hopeful that we'll see some transactions taking place in Czech and more product come to the market in the back half of the year, because really the competition for anything that does come is still very, very strong. As you move further south, I think when you get into Slovakia, Hungary, Romania, there is going to be a bit of a wait and see period. And I think investors are trying to understand the occupier market, and they're trying to understand what impact this is going to have on these markets that were traditionally developing markets where you had a lot of development activity happening, a lot of speculative developments happening. And I think now there'll be a bit of a pause on the market as people wait to see what's going to happen as the pre-lease markets have really kind of dried up. And maybe you're not going to see the big kind of square meter leases that we had seen previously for the last few years. I think out of those, Romania is probably the one that I think still has the potential to see some major transactions, because I do think the fundamentals are still strong there. Plus, I think the pricing has a distinct advantage over the other markets. Hungary is definitely turning more domestically focused. So the investor pool there has become, I'd say, over 50% domestic capital, if not more. That's going to continue. There's a risk that it does kind of fend off international investors as they get nervous around trying to compete in that pool. But I still think that Hungary will be an interesting market for your more regional investors that have been active in Central Europe for a while. Slovakia has the struggle in the sense of it's still a small market. And I think that it was one of the fastest developing markets in terms of the supply that's come onto market and is still coming onto market versus now the current take up when it comes to the occupier side of things. So Slovakia, while it still may have a decent year, I think is going to be, just because of the size and some of the other issues, potentially a little slower to bounce back than the others.
Given that, do you see that Poland, because Poland has, I suppose, more secondary cities, do you think that there'll be an increased flow towards those secondary cities? What's your sense of that?
I think they'll still be active. Is there an increased flow? I actually don't think so, because they were arguably disproportionately active over the past 2 to 3 years. And the investment activity, when you're looking at markets like Krakow, Gdansk, et cetera, had picked up tremendously. And while that's great, I do think you're going to see a lot of core investors retrench back into Warsaw. This also has to do with the fact that there's a distinct lack of domestic investment in Poland. So in other countries in a similar situation, the domestic investors continue to invest into secondary cities because they have the comfort, they understand the kind of the microclimate and the flavor of what's happening in those markets. I think your traditional foreign investor is going to seek the haven of Warsaw currently and maybe pull back from some of the secondary cities that they traditionally would have looked at.
Great, really interesting to catch up on the market, Luke. Look forward to seeing how 2021 progresses. Thanks very much.
Great seeing you, Richard. Thank you.